Hey guys, I just wanted to share something that I found recently that I think is a pretty big deal. And so check this out. So this is a problem I've been having. Okay, I've been trying to trade this up close within the day, and I've been getting basically thrashed around. So it goes up, it's going down. Now, even though the arrow's red and it's going down, there's certain things happening, like it lags or it doesn't go down fast enough, or whatnot, or I catch it at the wrong time and all of a sudden it goes green. And what I've found is what is happening is I am too close, say, to the quantum level. If you get too close to anything, all you have is vibrating energy that's jumping around. So I just started thinking, well, what happens if I back up my viewpoint? Instead of looking in intraday and within the 1 hour, like back it up to the day and or back it up so that my options expire every 2 to 3 weeks. So I'm not trying to interplay every day. I can still play the 1 hour, but instead let things ride for a week. Let things pan out for a while. And so along that vein, I started looking at this one chart called was one site called Bar Charts, and I was looking up some options. I wanted to know what did some options do in the past, right? And I'm talking options that I buy for 50 cents or a dollar or even $2. And while I was looking for options outside the money, not that far, maybe 5 or 6 on QQQ, that are expiring, in a couple of days, I started seeing this pattern. Like, whoa, like all of a sudden, like, options I was looking backwards at that are like, at $1.90. At one point, they were like 7, 10, $12. That's like a 10 or a 12 time return, 7 at the minimum. And I was finding this over and over again. Looking backwards, I would see these spikes of, just things that happened during the last month, month and a half. And so I started thinking about it, and I started thinking, how could I get in on this? And here's what I think's happening. Here is a daily chart of the cubes. Okay, what is happening is if you back up far enough, the market tends to go in a direction 80% of the time over time. And really, if you back it up even further to monthly instead of daily, here, let me see this. Go back to 1 month. All right, let's go forward. If you back it up, like way back it up, you'll see that over time, the cubes just keeps going up. And why is this happening? Because as a society, we continue to build and create, which causes value, which causes the market to continually rise over time, over the last 50 years, 100 years, 75 years. There'll be dips, there'll be crashes, but the market always continues to rise. So if you take a long enough viewpoint, you're going to make money. Say you went in a time machine, went back to 1850s, you purchase some stock and you just let it sit, you'll come back and be a multimillionaire. However, a lot of us don't have that kind of time. We have to trade in a smaller window. But I just wanted to show you something just along those lines, just to prove my point. Now we're going to go back to one day. Even at the one day, you'll see that the market tends to go in one direction like 80% of the time. Okay, it wants to climb. Now there'll be corrections, like what happened here from March to April, or February to April with the COVID, and that was the market's excuse to blow off some steam. Okay, happened in 2008, happened in 2000, but what you'll find is 80% of the time the market wants to go in one direction. So I started thinking, what if I put a spread out between call and put? Okay, maybe 25, 30 places out of the money on QQQ and just let it sit. And this is my answer right here. One way or another, almost every month and a half, there's some event or spike where that 50-cent option is suddenly $12 at some point, okay? Or it goes up to 7, or it goes up to 10. And if you have your limit order set for, let's say, 10 times, one's going to exit, and if you hold the other one, whether it be the put or the call, depending on the direction of the market, it'll expire worthless. But so what? If you put $100 down on both of them to begin for your first month. But let's take a look at how to do this. Okay, so we we are checking to see how did this work. So let's go back to say, we're at the current options of, what is it that expire for the cubes, 7/31. So let's go back to say June 1st. Now on June 1st, what was the market at? We need to see what it was priced at so we could take a look at. All right, here's June. So the market in June was like at about 232. So what you do is you write that down. And this is just for investigation backwards. This is how I had one guy who wanted to know how do I look up what an option did in the past, and this is how to do it. So you go to, so if you're looking at the current time frame, you want to look at the current options so you could see what to do in the future. So what I mean is 7/31 options are expiring soon. So you want to go backwards to, let's say, June 1st to see what would have happened. So let's see, June 1st, it was at 232. So now we go to this site right here, okay? Bigcharts.com, and this is how you look up those options. We can go to QQQ. All right, we hit that. And we go to option chain. Now we're looking, now this is a check to see what would happen if we bought options on June 1st, right? So now we know that we would have gotten in. So this is like expiration now, but we're talking June 1st. We got in at 232, okay? And I know from experience that the options that I would want to play this on would be like dollar options, and those are always about 30 strikes out of the money. So right here, the money's right here. But back on June 1st, the money was right here. So you count 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. I'm sorry, it was 30. 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. And I know that for a fact because I've checked on the new table. So we go over here and we look at the quote. Okay. And we could see that, well, it stopped giving data, but around June 1st, this option would have been priced at about 50, 60 cents. Now look what happened. This thing almost went up to 18 at some point over that month and a half. There were events that happened that, boom. I mean, imagine what kind of payoff that would be, right? You have a 50-cent option, and all of a sudden you're holding on to a $16 option. Like, wow, okay? And, of course, that would have happened with calls, because over the last month and a half, the market went up, okay? So because right now it's at 260 something. So over the last month and a half, there's been ups or downs, but the general trend was up. And so your call would have made money, your put would have expired worthless, but who cares? Because that was the last one. Because look, 16 times return, okay? So that's how you do it. So now you're asking, well, how do I know which option to buy? So let's look at the current table. Options chain. Okay, let's say you want to do that right now, okay? So you want to go about a month and a half out. Now, we're in July, so what is that? August, September. So you want to be in the middle of September somewhere. So let's go over here and go to September options. Click that. Wait for that to load. Hold on a second, I want to make sure I'm not running out of time on this. Alright, come on, September. Alright, September. We don't want the 4th. We want about middle September. So let's go on down. Middle September. Okay, so you want to do this looking forward. So at the money right now is currently what the stock price is at. And we want to pay about $1 or a little bit under. But unfortunately, we have to go way out. Remember I said about 20 or 30 out? So let's go down all the way to, okay. Do you know why this is happening? This is happening because the option writers, I'm usually going to have to go about 30 spots out. The option writers know that the market's going to crash, so they're pricing the puts more heavier than they are the calls. I only had to go out about 18 spots, 15 spots before I found calls I want to buy sub $1. So you want to pick this one up here at about 81. So you place an order there, and on the put side, let's see. See, look at this. It takes, see, they're pricing way higher. You have to go up about 30 spots to get under $1. See that? The option writers know the market's going to crash pretty soon, so they're making the put options more pricier. So you have to go out further. Okay, so we're going to go out to about 202 over here and buy that. Okay, so now you're set up with your call, your put. They're both sitting there on September 18th, and they're just waiting. Crash happens, 10, 15 times your money. Boom. Okay, then you get out. So now what you're saying is, well, what if I'm not in front of the computer when it, because it was only on one of those days where it spiked. That's why you want to set a good till canceled limit order. Figure out what it costs, what the option would cost at 15 times return, set it, walk away. I personally would do 10 times. However, because I think this crash is coming, it could go up to 20 times. So I'm probably going to just monitor it every day. So what does this mean long term? Well, if this works out, it could be pretty lucrative. Let's say you start with $100 on both sides first month, okay? 10 times return, that's $900 total gain minus the $100 you lost the other way on the spread, okay? Then you split that 900 in half for the second month and a half, 450 put, 450 call, and 10 times return, boom, that's $4,050, okay, minus the loss of the other side. Split that in half, that's $2,000, just over $2,000 on both sides, $18,000 total gain after you subtract the other one. Then the next month and a half after that, that's when things get nuts. That's $82,000 total gain. And what that is compounding interest at 10 times return per month, if this works. Now you're saying, well, how do I know this works? Well, it's not that cheap to begin with, okay? You could just put $100 on both sides, see how this works out. I would tend to think that this would really work, especially this first time, because there's about to be a crash. So that's this video. I hope this helps you. I think this is a pretty big discovery. Back up your trading. Not so close. Definitely don't do hour by hour during the day. This is backing up the trading to a month and a half. The market tends to either climb or drop, and this takes advantage of that fact. All right. Thanks a lot for listening, guys. And